This could be quite a sensitive subject, so I'm going to be careful what I say. Hi, this is Everyday Prepper. Welcome to the channel. This video is a bit of an update on another video that I did 2 months ago on about the 5th of August, or on the 5th of August, which was a Monday, when if you'll recall, the stock markets were all over the papers as crashing that day, and they were comparing it to another event called Black Monday. Now, during that video, I was talking about some information that I'd gained from the Tony Robbins book, Money, Master the Game, which I think I had the audio book, and it helped me stop panicking, or at least not panic as much during events like the event on the 5th of August, which was, there was various reasons behind it, but I just wanted to go back and just have a look at what's happened since then, because it's kind of played out as I said it hopefully would play out, and I wanted to just look at some reasons why that may be. I'm not here to kind of gloat or say that I was right and everybody else was wrong. Far from it. I'm not a financial advisor. I'll make that very, very clear. I'm not an expert in finances. I did work in a bank, but that absolutely does not make you an expert in finance as well. What I have done over the years is, over several years, probably a couple of decades, I have been very interested in how the markets work and how they go up and down and what causes them to go up and down. I've had accounts with IG, which is one of the largest spread betting and share dealing platforms. I've had dealings with Hargreaves Lansdown and other share dealing platforms in the interim, including even eToro. And what I found is you'll find that the prices of certain shares and certain indices will go up and down according to two major factors. One is called fundamentals, which is basically any news, events, world events, global events, that kind of stuff. And then you'll also have technical data, which tends to cause trends in the system. And because a lot of trading now is done by computer algorithms, the algorithms are trained to look for those trends and draw imaginary lines which they kind of track. And I'm just going to show you what that means. So the reason I'm covering this from a prepping point of view is I'm 53 now, and I'm coming up to a point where I may have some access to some of my pension funds, which I've been working hard at to try and get to a point where any decisions that I make towards retirement will be made easier by the fact that my shares or my stock market investments have performed well. And I also know that a lot of subscribers and a lot of people who watch this channel, for whatever reason, are of a similar age group. Not all, I hope, but I know that a lot of you are. So this is, again, absolutely not advice, but I just want to show you from when a couple of months ago when I made the video, I was talking from experience, but it's hard to show that when I haven't done a video beforehand. So now I've got the data to go back over. I just wanted to show you kind of what I meant. I hope that makes sense. So what I'm going to do is I'm just going to open up another slightly different platform. The video quality, I'm sorry, will suffer slightly, but I can then switch between screens and show you exactly what I'm looking at. Right, well, we've switched over. Hopefully you haven't lost too much. We haven't lost too much quality there. The most irritating thing is that I've had to re-record all of this again because the audio didn't come out. So where I say that I'm not a financial expert and I'm not a technical expert on stock markets, I really mean that, because I can't clearly use a computer. So don't take anything I say as advice. Right, let's call up some bits and pieces on here, which will hopefully make sense. Right, first of all, what I've got here is, this is my IG account. And so IG is like a spread betting company, one of the major spread betting companies, and I've used them. Also eToro, they're a different type of spread betting as well. They do CFDs, which is another kind of derivative. These are all terms I'm just banding around. If you know what I'm talking about, you know what I'm talking about. If you don't worry, it doesn't really matter. But what I'm showing you here is a chart of the here we go, Wall Street. Now Wall Street is basically the top 30 major companies or corporations in the US. and that is what's called market capitalization weighted, which basically means that the more capitalization of the market each company has, the more sway it has on these charts. And so obviously they go up and down, and stock markets don't go in a straight line, but they do follow trends. And the reason they follow trends, especially these days, just to explain in a bit more detail, is a hell of a lot of trading now is done by algorithms. So what I'm going to show you on here is how the algorithms can potentially follow the charts. It's very clever stuff, and beyond my kind of programming ability. Unfortunately, and also these things happen at like trillions of a second at a time. They're very, very, very quick, so very hard to emulate. But just to show you on here, for instance, you've got this trend going kind of generally up. The trend was up before. Now, this is what I wanted to show you. That red bar there, if you look down the bottom here, the date, 5th of August 2024. So 5th of August 2024, we had a bit of a blip down here, and it was a spike downwards. Now they had news outlets comparing it to Black Monday. Now Black Monday, just to give an example, was, let me just show you on here. Charts, images. Oh, Jesus. Right, so here we go. So that's a Black Monday chart. Can you see that? Yes, you can see that. Right, so that's a Black Monday chart. It went from, where do we go? Let's say it went from 2,600, dropped down to 1,700. So nearly 1,000 point drop. It dropped down, and it didn't really recover. It just carried on ticking away there. And that's daily. Yeah, that's a daily chart, right? So in one day, it dropped 1,000 points. That's the Dow Jones, which is basically Wall Street. Okay. When we have a look at this chart, we went from here. Let's get the. We went from there down to here. So we dropped 1,000 points. Well, 1,163 actually, slightly dropped more. So you can see why. Oh yeah, of course they're comparing it to Black Monday, dropped 1,000 points. Yeah, but look at what it started at. You know, it was 39,500 to 38,000. So a drop of 1,000 is nothing. It's a drop in the ocean. And in fact, it drops, even on the 1st of August, it dropped about the same. It's nothing major. It's dropped since then. It's gained 1,000 points before then. Absolutely nothing to worry about, really. And it was all blown out of proportion. So what I'm saying is, the reason for the thumbnail and the title, saying, do your own research, don't believe the fear mongering, is that if you went on YouTube on the 5th of August, you'd have the whole page would be all sorts of channels, including prepper channels, that would have been fear mongering and saying basically, oh, this is it, the stock market's crashing, war's imminent, you can see it from the charts, this is it, take everything out of your investments, take it all out, cash is king, da-di-da-di-da. We're right. And all they want to do is they just want to try and justify themselves. And unfortunately, a lot of people listened, and I've heard a lot of people did actually take all of their money out during that event out of the stock market. And what that meant was they lost out massively. They ended up selling up at low prices, which is a kind of a big no-no. You want to buy low and sell high, not the other way around. And that's what they ended up doing. Only to watch the stock market then pick itself up again, which is what I said it would do. And the reason I said it would do is because I've seen it before, and I knew this was being blown out of proportion because of the size of the overall markets. The drop was really nothing. It was it wasn't. When you talk about a percentage of the market, that's different. When you're talking in actual points, you've got to look at the comparative. How many points does it start with? If something starts with 1,000 points and it drops 1 point, that's not going to be, that's a drop in the ocean. If something starts with 1 point and it drops by 1 point, you've got nothing left. So it's a major difference. I hope that makes sense. But that's kind of what it looked like. And when you look at the image, for instance, of the Black Monday chart there, so it only started at 2,600 and then lost half of its value overnight. Well, to have the same event as Black Monday, you'd have to see where we're starting about 40,000. You'd have to see the market drop by 20,000 points. So it would go off the chart. It goes down from 42 there down to 38 there. It would go off the chart. Absolutely, you would notice it. So what I'm saying is, you please do your own research when it comes to things like this, especially when it comes to money. Crikey, money is unfortunately the be all and end all. Well, it's not, but it's very important. And if you lose a lot of it through just an overreaction, you're going to be pretty pissed off. I know I would be. So there were people, and I said on that video, I said that I'd just lost £9,000. Excuse me. I said on that video that I'd lost about £9,000 on my pension, which I had on the stock market. But I wasn't drawing anything else out. I was just going to wait and see how it panned out. And that's because I knew that a 1,000-point drop was just a drop in the ocean. It was going to pick up again, as they generally do. And even after Black Monday, it picked up. But it took a little bit longer. So I've now gained back all of that 9,000 and some just by holding out. If I'd had some money at the time spare, I would have invested when it would bottomed out, because everything's on sale. And when everything's on sale, it's going to go back up again, which it generally does, because companies will always strive to increase their share price and increase their profits year on year, because they have shareholders they're beholden to. So generally, company prices will generally go up year on year. If they don't, they'll drop out of the indices and will be replaced by ones that do. Which is why I find indices a much safer bet than individual shares. So, but anyway, this is not all about share dealing or spread betting or stock market investing at all. This is about getting your information from the right sources and not just jumping on the bandwagon and not panicking during. So it's easy to panic. Oh well, World War III's tomorrow. Well, rather than panic, why don't we just check a few other sources? Oh, the stock market's about to crash, it's a new Black Monday. Well, rather than panic and draw all your money out, just double check. That's all I'm suggesting. So let me just go into a little bit more detail about why I've said what I've said, because I want to qualify this. So first of all, let's just delete that off. Right, so this is the 5th of August here. Each one of these bars represents one day. If it's red, it means it was lower than it was when it started. If it's green, it was higher than it was when it started. Simple as that. There's a bit of other information in there as well, but for our purposes, we don't need to know that. So what you had a peak up here. That was a peak at that time, which was around July, mid-July, and this down here is something called the Relative Strength Index, or the RSI. And I use that. I do use some other indicators, and there's a lot of investors that use all sorts of indicators all over the place, real mess. But I like to kind of keep it simple. But the RSI, basically, is this figure over here, 70 and then 30. If it hits over 70, or if it hits 70 and above, it means that price is overinflated and is due to come down. If it hits 30 or lower, it means the price is oversold. It's called oversold, which means the price is lower than it really should be, because the company's worth more than that, or the stock is worth more than that, and it's therefore due to go up. It's a general indicator. It's not always gospel, but it does give you a good idea of what's going on. And also, if there's a bit of an anomaly, like it's doing one thing and the market's doing the other, then you might think actually there's a big change coming. But here you can see the market is overbought. Right, it's overinflated, the prices are way too high, they need to come down. So what happened? They came down. So they came down, but the investors weren't happy with that, so you had some people try to rally, or algorithms tried to rally it back up again. It failed, went down there, and then they tried to rally it again, which often happens. After it rallies twice, if it fails to meet the previous high, quite often there's a big drop. Well, the big drop on the 5th of August started 3 days before. But they are all saying on the news, oh well, this happened because of recession fears in the States, and the Japanese interest rate was changing, and there's some other financial information that's come out. Well, that's called fundamental analysis, which is basically based on news events and global events. And then what I was just showing you there on the charts is called technical analysis, where you can look at previous charts, you can see the trends, and you can base your future assumptions based on some of those trends, because sometimes it can ring true. But it's not always dead on, not always dead cert. A little bit like future events can be ruled by the past. They say the past doesn't repeat itself, but it rhymes, so it's similar. And so you can see patterns, and that's basically what technical analysis is about. But you can see the pattern there quite clearly, that it was due to drop anyway, so it did drop. Now, if you look at the RSI, as it was dropping, the RSI is going down, it's almost oversold. So it's due to go back up again. So what does it do? It goes back up again. So it goes back up. This is Wall Street, I think we're looking at, yep. So Wall Street then goes back up, nice big rally there. All the investors come in here, they go, way, it's all on sale, let's buy in. And that's after everyone's panicked and sold all their investments because they're worried it's going to bottom out. Whereas if they just hold on, it wouldn't have gone down so much, it would have just levelled out. But no, the buyers, they know, and the algorithms, they know that this is what happens. Everyone sells off madly, and then when they've got nothing left to sell, the buyers come in, buy everything cheap, and then up it goes to higher than the previous high. And then it's dropped again because the RSI shows that it was a little bit overbought. They got a bit too excited, bit of a sell-off, and then it's even higher now. So during sort of this time here, and this time here, was where my money just made itself back. Now, I'm not just invested in Wall Street, I'm invested right across the globe in various bits and pieces to kind of hedge my bets a little bit, but you get the point. It's rallied to higher now, and we're only, 2 months later. It's now rallied higher than when it was before the drop. So if you just held out, you'd be quids in, and that's the idea. And also, if I'd had some spare money around this time, I'd have been throwing it in there to add to it. So look at the FTSE, something else, obviously that's the UK top 100 companies. And again, beforehand, so this is the 5th of August here. I apologise if this is boring, it'll probably get absolutely no views whatsoever. You'll probably be switched off by now, I know I would be if I wasn't into this. But I just find it interesting that, the news and all the alarm on the news, Black Monday fears and all this sort of stuff, and I'll put up some screenshots of it. It's amazing what they like to portray when it wasn't that at all. So this is the FTSE 100. A few days before, it was just ticking over really. It wasn't really doing anything. It was just going up and down, up and down, up and down. It wasn't really trying for new highs. All of a sudden there was a bit of a rally for whatever reason. It rallied up, went really high up to I think the highest that the FTSE's ever been actually, which it does now and again. Got to almost overbought, and then it was due a drop, so it started to drop down. Dropped quite a lot actually. And then look what down here. Down here is all the volume of people coming in, right? So green means buyers, red means sellers. So you had sellers all along here, and then green just flooded in and went, yep, help myself to that. Everything's on a bargain, low price, and they all bought in. It tried for a rally, couldn't do it, sold off, tried for a rally, hit a new high. So literally, where are we there? 29th of August. So within 25 days, it had already hit a new high. So anyone who'd sold off all their FTSE stuff just lost out majorly. If you'd have held on, 25 days later you got even a new high. Now what it's done now is, as you can see here, it's a little bit overbought. It's levelled off, and it's now, if I draw a line there to where it is now, right, that line there where it says 8272 across there, it's pretty much where it was just before the so-called crash, right? In fact, it's dead on. So it hasn't moved. Nothing happened. Nothing to see here. Do you see what I'm saying? Nothing to see here. Whereas the news go mad, YouTube goes mad, this means war's coming, this means everything's coming. If you just sit back and make sure you check your sources and check your information, then you're not going to get caught out. I won't bother going through all the rest. Oh, actually, just one that I will go through. Lockheed Martin, I do keep an eye on, because good indicator of war, because they manufacture a lot of weapons and weapons systems, targeting systems, that kind of stuff. And they've been having an absolute field day. These are all the major kind of big escalations in the Middle East and Ukraine have caused Lockheed Martin's share price to rocket. And it's done really, really well. You see all these buyers coming in here. It's just gone absolutely mad. And it's just on the up, right? So it's on the up, and there was a massive up there. And then what's happened? It's just gone down. Probably because of the hurricane, I would have thought, because there's you've got Central Command in Florida has possibly been damaged. I don't know, but that doesn't show me that there's a war coming imminently. And this didn't really show me as a war coming imminently. It just meant they were making a lot more weapons. And they're making a lot more weapons here. But it's interesting to watch the share price. When they're saying, oh yeah, everything's going to crash, the whole stock market won't be there. You've got people like Robert Kiyosaki, who, the author of Rich Dad Poor Dad, supposed to be an absolute guru on the subject, telling people, recklessly telling people to sell up all of their investments and buy Bitcoin, and gold. All right, nothing wrong with buying gold. Generally goes up. Bitcoin is not even regulated. It could be removed at some point. And I know that people like Bitcoin, they like cryptocurrency because it's away from the government. The government can't get their hands on everything else. Well, they're doing their damnedest to do that, and it's very volatile. So I'm not here to recommend anything, but I personally don't. I have dabbled in cryptocurrency, but only when I mined it myself. I mined Ethereum for a while when you could on a fairly high spec PC, and I was using Solar to run my PC to mine Ethereum, and I was absolute quids in. I was making about £100 a day mining the stuff. And then I sold it all for cash and used it to pay off a load of other bills, which was great. But now you can't do that anymore, and that was a few years ago. I just happened to cotton on when it was the right time to do it. But anyway, I wouldn't invest in Bitcoin or any of that other trash stuff. Invest in gold and stocks and shares and stuff like that, but not unregulated stuff that could end up zero. You could wake up tomorrow morning and your Bitcoin would be zero value. You just don't know. It can be that volatile, whereas stocks and shares, it works completely differently, and there's backups behind it. So I'm sort of more for a safe bet, especially at my age now when I'm looking at actually trying to realise some of this money. Maybe when I was much younger, definitely I know I would be taking more risk, but not at this stage. So it might be right for some people. Certainly not right for me, and I certainly wouldn't be selling all my shares and all my stocks on the advice of Robert Kiyosaki and buying Bitcoin. No way, because the guy is plain wrong. He was one of the voices that came out on the 5th of August saying this is it, new Black Monday, everything's crashing, and he's wrong. Simple as, and the proof is in the pudding, as they say. The figures are there to show what really happened. So anyway, a couple of other things coming up. I'm going to be doing some more outdoor videos. The weather's not really getting cold. I want it to get colder now. I want to start putting on my my big boots and my big camo stuff and my big smock and things, and going out camping and roughing it, and shivering at night instead of sweating. That's what I want. I like all that kind of stuff. And so I'll be sticking under a tarp. I will be staying under a tarp. I will be resisting my tent for as long as I possibly can. But I've got some really good other outdoor stuff that I've got planned. I've also updated the website now, so there's none of the stuff that's going to be shipped from China, as I mentioned on the previous video. It's all UK stock. So if you do want to support the channel and you've got a few things, bits and pieces that you want to pick up that you were going to do online anyway, just check out the site, everydayprepper.net. There's a few bits on there. It's quite competitive. priced. You'll get it within a couple of days. It's all posted from the UK, and it's all good stuff. I will be trying to demonstrate it on videos as well. I've demonstrated a few bits and pieces like the stove and the firelighters and all of that, and they seem to work really well. Firelighters, I couldn't even blow them out. Thanks for your advice, by the way, guys. People who put guys and girls, I should say, who put advice in the chat about how to smother it, because I was trying to blow it out, nearly set my boat alight. Bit of a nightmare, really. But you learn as you go, and that's what this channel is all about as well. Learning as you go, and showing the good with the bad. You know, the rough with the smooth. It doesn't always go well. So, but I'll try and record both sides of it, if you know what I mean. So we've done that. As I say, also members will get 10% off anything they order from the site as well. So, and membership is another way you can support the channel. While we're on the subject of membership, I just wanted to welcome our 2 new members, Indy Scott Bryan and Kirsty Hart, who both contribute to the channel as well. So thank you very much for joining. Thanks for supporting the channel, and welcome to the membership. I did update, I think I mentioned it in the last video, I've updated the membership to include some videos, when I release them, will be released early on the top supporter tier as well. So you'll get to see the video a few hours before it goes public. I just thought I'd just add that on there. It's easier for me. So and hopefully you'll benefit from that as well. So aside from that, as I say, got some good stuff planned, some quite risky stuff as well, which I'm kind of looking forward to, I think. It's all educational, of course. In the meantime, thank you very much for watching. I hope I haven't bored you stupid, and stay prepared.